Let's start with something simple. This is one of the best times this year to be diversified across strong growth stocks because growth in many areas has been working. For most of 2025, it felt amazing to hold nothing but data center, AI, nuclear, and quantum stocks. But that weight has gotten too risky, and the warning signs finally showed up. Jim Cramer opened the November monthly meeting by reminding investors that there are plenty of buying opportunities outside the AI trade heading into the last stretch of 2025, and Jeff Marks joined him to break down the current positioning of all 34 stocks in the portfolio. Apple, a massive customer base, makes Apple a powerful AI partner, and the newest iPhone 17 lineup is selling very well. The strategy stays the same: own it, don't trade it. Amazon. Stay long on this mega-cap leader. Amazon continues to grow its high-margin cloud business and remains dominant in e-commerce, advertising, and retail. Broadcom. Even though NVIDIA is still the king of AI chips, Broadcom remains worth owning. If the company locks down the Microsoft chip contract, the stock can surge. If Broadcom keeps dropping, it becomes a buying opportunity. Boeing, a buy right now. The turnaround under CEO Kelly Ortberg is moving forward with improving cash flow and a path toward reducing debt. Jim wants to get very big in this name: BlackRock. The stock has lagged peers, but there's no reason to walk away. BlackRock's push into private credit raised some questions, but earnings were strong and fee growth was impressive. Bristol-Myers Squibb. We own it for the potential schizophrenia and Alzheimer's treatments. The stock is capped until trial clarity arrives, and even the recent beat and raise wasn't enough for investors. If shares rise, we will trim. Capital One. Top credit card issuer doing everything right. With the Discover deal complete, the buybacks are massive. The only hesitation is the stock already ran higher. Costco flat this year, but still high quality in a tough consumer environment. The execution remains elite, and member value is unmatched. Jim says you have to own Costco and sees room for upside as membership and sales grow. Salesforce. No new buys until management shows generative AI won't shrink paid seats. AI tools like Agentforce are promising, but risks remain. CrowdStrike. CEO George Kurtz continues leading strong growth. One of the best performers of 2025, we hold and wait for a pullback to add. Cisco Systems. Shares jumped after a strong quarter and raised guidance. Weakness in security. Didn't matter. Cisco is still an underrated winner in AI infrastructure. DuPont. Since separating from County Electronics, the stock surged. Under CEO Lori Kulk, the company is delivering a strong water business and diversified materials division balance out sector risk. Danaher. Momentum is building. Aggressive buybacks show confidence. The company should diversify beyond life sciences into a broader mix of sectors. Disney, a tough stock to own. Shares fell sharply after mixed earnings. We downgraded and trimmed. Jim is ready to make room for something else because Disney still carries too much baggage. Dover, a strong industrial conglomerate with a solid data center play. Buybacks and strong earnings keep us long. Eaton, a sensational industrial tied to the data center boom, but it trades erratically, so patience is key. Wait for weakness before buying. Vernova, demand for natural gas. Turbines is exploding due to data centers. Management needs to expand production. Jim likes it too much to sell, but wants a bigger commitment to growth. Corning, fiber optics will replace copper wiring in data centers due to heat issues. This shift will take time, but Corning will be a major AI infrastructure winner. Goldman Sachs. Financial stocks are cheap, and Goldman is positioned for upside. If deal-making picks up, investment banking fees will boost results. Home Depot. A strong operator held back by high mortgage rates. We want it to win, but we won't advise buying right now. Honeywell, a buy as the upcoming three-way split unlocks value. The aerospace division is the sleeper powerhouse. Jim believes investors don't yet understand its earnings strength. Linde. Poor recent performance, but a new position here can make sense. UBS upgraded to a buy, pointing toward stronger EPS growth. Ahead, Eli Lilly. Jim is extremely bullish thanks to blockbuster weight loss drugs. The new Medicare deal with Lilly and Novo Nordisk opens the door to record sales. These could become some of the biggest selling drugs ever. Meta platforms. Investors dislike the heavy AI spending, but Meta is fighting to stay competitive. With shares lagging peers, the stock is now relatively cheap, not a buy yet, but worth watching. Microsoft Azure growth continues to be a major catalyst. Jim wants to buy more on a pullback. Microsoft is set to dominate the biggest category in enterprise AI, Nike. The new CEO is refocusing the brand on sports and innovation. Early signs are positive. Weak consumer spending is punishing the stock, but that creates opportunity. Nvidia. Still the best chips in the market. Despite growing competition, we trimmed earlier this year and hold the rest. Own it, don't trade it, Palo Alto Networks. Strong acquisition of CyberArk and top cybersecurity positioning. We want more on a pullback, despite the rich valuation Kennedy Electronics, a solid semiconductor-related name formed from the DuPont split. Great partnerships, but a volatile trade Starbucks. The turnaround is moving forward. Selling part of the China business was a bold move. Recent weakness was a buy, Solstice, Advanced Materials. Strong exposure to nuclear energy shares remain volatile after separating from Honeywell TJX companies. A standout in off-price retail, up over 22% this year. Consumers looking for bargains benefit TJX Texas Roadhouse. Tempting to buy, but beef inflation is crushing margins. Management refuses to raise prices, which means earnings stay pressured, Wells Fargo. Another undervalued name. With the asset cap lifted, the bank can finally grow and expand high-return divisions. If you like breakdowns like this, join me on Patreon for exclusive content and deeper investing insights. And don't forget to subscribe for more updates like this. Patreon link in the description.